This is it, guys. This is the video. It's when I finally reveal the holy grail of trading, something I've been using for years.
Are you ready to turn hundreds into thousands, thousands into millions? Are you ready to be able to buy that Lambo in a week, to buy watches, cars, houses, all of that trading just micro futures, right? Just micro futures, a very small increment of the overall market that can turn into thousands and hundreds of thousands of dollars in profits. This is all this video is going to be about, right? Now, you might be a little disappointed to know that I was lying, because what I'm going to be breaking down today is actually trading micro futures for beginners, and not all of it was a lie. You can make really good money trading micros, and I'm going to break down how, right? These aren't just a little bitty BS instrument that people just start as like little baby traders and progress into minis eventually. This is a tool that has a lot of value, malleability, and it is a fantastic educational experience for new futures traders that dip their toes in the market with real life capital. What I'm going to be breaking down in this video is going to be everything micros, but mainly I'm going to be showing you guys a strategy for newer traders, for beginner traders, on how you can use this extremely powerful tool to get started in the most liquid market, the futures market, and how you can actually scale that to have $100 days, $3, $4, $5, even $1,000 days using just the micros. And at the end, I'm going to be doing a little example work, and I'm going to show you an example of a few trades that have been taken on the micros and how I personally trade the micros with my personal trading strategy for micros. All that's going to be revealed. It's probably going to be a longer video, but if you got clickbaited into Lambos, you should probably stay for the real truth of it. Now, this is the reality of trading on this channel in this video. So if you're a newer trader, if you're someone that's actually struggling as well in the futures market, you're really going to want to watch this video, because I'm going to be breaking down every aspect of micros, and then I'm going to give you something actionable at the end. It's not going to be all just random fluff that you see everywhere, all theory, all this and that, right? It's going to be something real and actionable that you can take to the markets, solidify the plan, back test it, try it out, and then implement it. So let's dive into this video, and if you guys like our content, please hit that like button to show us the support, subscribe if you're new, and I'll see you guys on the other side of this intro. Now, imagine being able to access a professional market only at the fraction of the cost, right? Just a fraction of the cost. That's what micros are. They allow you to trade the most liquid equity futures market without putting down hundreds of thousands, millions of dollars like big institutional money. It's a very valuable asset and experience that a lot of new traders and just traders in general take for granted. Like I said before, not only do the micros allow you to access this market, but they also provide an immense emotional experience for newer traders. They allow you to actually trade the live market at a fraction of the risk realistic. So not only are you going to learn your strategy, but you're going to be able to implement your strategy in an area that doesn't require you to put too much capital up. So it's something that you're okay with risking, right? It's going to allow you to actually experience what it is to trade live, how it feels to trade live, how it is to put money on the table without starting off with the E-minis, right? The minis on the S&P, which is what I started off with, and one singular point is $50 per contract to give you some kind of context. So I could be down a couple of $100 on my account as I'm just learning to trade this in a live environment. Now with the micros, you have just 1/10 of that cost as your risk. So we're going to be breaking down a few different things throughout this video to start this off. Number one, what are micros, right? We have to understand what they are, what asset it is, exactly what we're dealing with, because if you don't thoroughly understand the asset you're trading, you're at a disadvantage right away. We're then going to be talking about account size. We're going to be talking about what account size do you need, what are the margin requirements for micros, right? These are, again, concepts that if you don't know, you're trading blind realistically. You don't have the full experience of the asset itself. After that, we're going to break down why even trade micros, right? As a beginner, what do you gain out of this? What is the truth of trading micros? Then we're going to be breaking down how to actually effectively trade micros as a beginner, someone that wants to learn the futures market. Followed up by scaling micros, actually revealing what that looks like, how to actually gain traction on the micros. Then we're going to wrap it up with an example and a trade sequence with a breakdown on the micros to show you that this is something very plausible. So again, it's going to be a lengthier video. There's going to be a lot of information, so go by that. Fish out the information you're looking for. So let's start from the top. What are micro futures? We have to understand the asset that we're trading. We have to understand all the intricacies of that asset. Micro futures, right? They're a new product that came out a few years ago that replicates a fraction of the overall contract, which in the equity market, on the futures market, is the mini, right? The E-minis. You have the E-mini S&P, the NASDAQ, right? The Dow, all these different equities, right? You have also gold, you have oil, and you have micro versions of all of these. So the micro is 1/10 of the margin, the dollar per point per tick, right? The size in general. So if we take the S&P 500, the E-minis, which is the most liquid equity future, the main future that I trade, the main asset that I trade, it's based on the S&P 500 naturally. So if I take the micro version of that, the S&P itself, the E-mini, first and foremost, the first category, the E-mini, it's $50 a contract per 1 point of movement. If it goes up a point, you're up $50. It goes down a point, you're down $50. And each point, there's 4 ticks, right? 4 ticks. Each tick is $12.50. I'm not including commissions in this. So that's one S&P E-mini future, right? So the ES. Now you take the micro counterpart, the MES, it's 1/10 of all of that, right? It's $5 a point, right? $1.25 per tick, and one E-mini is pretty much the equivalent of 10 micro futures. So when you trade these on the micros, if you go up or down a point, you're up or down $5 per contract, right? Fairly simple concept in that. Whatever micro future you take of its E-mini counterpart, right, you can just slash it by 10 and that's gonna be your micro counterpart, right? For oil, it's gonna be $10 per cent, right? On the movement, it's going to be $1 on the micros, so on and so forth. Now that you have that general concept and general understanding of the micros, you then have to understand what the sizing looks like, what the margin looks like in the micros, because it's a very pivotal aspect. You have to understand the product you're trading, because a lot of people don't know this and they get very confused, right? They don't understand the sheer leverage that is available in the futures market. We have the minis and the micros. On the E-mini side, the futures contract is 50 times the index, right? That's the notional value. The notional value is the whole value of the contract itself. If you trade on margin, that means that you put down X amount to be able to control one micro for its notional value or one mini for its notional value. So if it's 50 times the index is 4,400 on the minis, let's say, right, the S&P. 4,400 times 50, that's $220,000 per contract for notional value. That is a surmountable size. Now, when we talk about margin, margin is the dollar amount that you have to have in your account to be able to control one of these contracts. So if you have a discount broker, like I use AMP Futures, you can have other discount brokers as well. They're called discount brokers because the amount of leverage is insane, right? I am able to control one mini with $400 worth of margin. That means if my account is $400, I gain access to that one contract that is worth notional value $220,000. So that's 550 times leverage, right? That is huge, huge. I take the micros is the same thing. However, the micros, they're 5 times the index. That's why there's a dollar denomination. It's 1/10 of the mini. That means it's $22,000 of notional value. That's being able to, I can control that with only $40 of margin in the account. That, again, 550x leverage. That's insane. Now, these are massive amounts, and this is where a lot of people go wrong. A lot of people are looking at this and say, I'm gonna go trade micros, put $200 in the account, let's rock, right? I'm trading 8 contracts. We're doing this. That's the bad way to look at this. It's a bad way to think about this because that's what happens. That's why a lot of people lose. They put just bare minimum margin. The second you get under the margin requirements for the position sizing you have, you're gonna get blown out or some contracts are gonna be closed. Right? This is how a lot of people lose. This is how a lot of people blow out accounts. Now, if you take a look at other brokers that are non-discount, they offer different margins, right? Which are safer, but a lot of people don't really like that because they want to have the access to crazy margin amounts. Now, for example, a lot of brokers, non-discount, right? Bigger brokers, they'll offer the E-minis around $10,000 worth of margin. The micros around $1,000, right? Don't quote me exactly on the number, but it's around $1,000 per micro, $10,000 per mini. That's why a lot of people, when they trade, right, they're looking to trade the E-minis right away because they want to make the big bucks, right? 20 points on the minis is $1,000 per contract, right? You get a 20-point move on multiple lots, is going to go crazy. Yeah, you're gonna make crazy money. That's not what we're looking for here. You want to learn with the micros. That's the whole concept. So when you understand the notional value and you understand the margin requirements. I say that traders, when they're looking for account sizes, if you're trading under $30,000, $40,000, $50,000, if you're under that range, you should not be trading minis, right? You should be trading micros. And I think everyone that's new to trading should be trading micros to begin with, because why? Because they are a great learning tool for the futures market that allow you to trade with lower risk in the market itself. So if I were to break down what some of the account sizing would be for the micros, I would attribute $1,000 of margin per micro contract that you trade. Let's say you have a $5,000 account. I would not be trading more than 5 contracts at a time on the micros. I would be trading the minis with between $5,000 and $10,000 worth of margin per contract, right? So I'm not really going to be trading minis with under a $40,000 account. Some people go as far as to say they wouldn't trade them with less than 6 figures in the account, right? So we talk about notional value and account sizing. This is the truth right here, right? Don't let people tell you that you can put $100 and trade futures in the account, right? That is going to be some kind of BS online prop thing, right? You do $30 for a $100,000 account. Just think about it. Think about it. So when we have that in mind, the next thing I want to talk about is like, why even trade micros as a beginner, right? What do we gain from this? How do we kind of propel from this? I've already talked about it a lot, right? And I'm going to beat that horse to death because it's very, very important. Now, everyone entering the futures market, everyone entering trading in general, the allure of it is making money. Let's be real. You're here because you want to make money. You want to make money out of the market, sit at home, do it in front of your computer. If you disagree with me, you're a liar. But when you want to do that, right, a lot of people jump straight into the minis because you can trade more cash, right? You'll make more money if it goes your way, but you'll lose a shitload if it doesn't. And if you're beginning, you're probably doing it with a smaller account that can't handle that stress. So why even trade micros as a beginner? I don't care how much capital you have. This is a learning experience. The reality of trading is something very, very difficult that very few people can do successfully. And one of those reasons is because they don't really know what they're doing wrong and they don't have a concrete strategy to back that. They also lack risk management. They lack emotional awareness and psychological awareness in the market. Those are the main factors as to why people shit the bed. So the thing with micros is it helps you with all of those factors and then some. It allows you to build that confidence and helps you create a trading plan, right? It helps you understand risk management. It helps you scale. It helps you learn how to live trade. All of this because the risk is very small in comparison to other futures assets. One singular point on one contract is $5 of risk, right? You're not going to break the bank unless you go crazy with the micros in losses. So it's a very, very good tool with a smaller account for newer traders to actually get into the live market and experience what it's like to actually trade without just getting blown out. I think that everyone should use this as either a stepping stone or a very concrete asset to actually trade, because you can scale it, you can grow. You can trade 10, 15, 30 micros, right? You can trade 8 micros and still do extremely well, making hundreds of dollars a day. Because what people don't realize is that not everyone in the world makes crazy money, right? Traders are known to make crazy money, but you can turn this or start this as a very concrete goal to be able to just replace your normal income. You know, around $300 a day is something like $65,000 a year US, right? Not that many people do that. 500 bucks a day is over $100,000 US, and you can do that. It's achievable on the micros, right? It's very achievable on the minis. You just slap it quickly, but you have a lot of risk doing that, right? You can scale up on the micros and be able to achieve those goals. You can make 6 figures a year trading micros. It's a very plausible thing, but it's how you go about it, how you learn them, that's gonna really separate the traders that are serious about it and those who just lose realistically. Talking about all this is great, but as a beginner, right, how do you actually effectively use this? How are you actually effectively going to develop something that's worth trading, and how do you effectively use the micros, right? Today I want to show you that it's very possible to generate hundreds, if not thousands of dollars on a daily basis with the micros themselves. So effectively using them, these are some steps to take into consider as a newer trader or someone that's just generally struggling, that you're starting off with the futures. Number 1, you want to have an adequate account balance, right? Understand the margin aspects of the micros and don't just throw 50 bucks in the account and see what happens. Number 2, first and foremost, you have to develop a risk management plan. That is based on the account size. For example, you risk maybe 1% per trade or so on and so forth. That allows you to kind of backtrack and understand how many contracts you can actually trade. Number 3, very, very important, developing a trade plan that is back tested, is tested on the sim. that has a solid percent profitability, right? A system that actually has profit. When you can develop something like this and you can test it and you can back test it and you see results, you gain confidence in the strategy itself, and it's something that you can take into the live environment. Start with just a few contracts, right? Start with 2 to 3 contracts on the micros to begin with, right? Learn how to manage multiple lots, learn how the risk management process works with that. Number 5, what I tell a lot of people is at the beginning as you're learning, don't focus on trying to break the bank and getting all these massive moves. Every move starts with base hits. Take a bracket, for example. When you enter into a trade, you have a 3-point stop, you have a 5-point take profit. That's my general. On the micros, I do it a bit wider. I'll do maybe 3.5, 4-point stop and about like a 6 to 8-point take profit, right? Looking for those larger moves and try to manage it from there. But as a beginner, just focus on taking those base hits, because everyone wants to catch a 15, 20, 10, even 30-point move. However, everyone has to realize that you're going to catch 5 points before you catch any of those. Every 5-point move is a 5-point move, but not every 5-point move is a 10-point move. Every 10-point move is at least a 5-point move. That's something that a lot of people need to understand, and don't get too greedy with this. You're here to learn. You're not here to be a millionaire in a week. Number 6, you can learn the ins and outs of a live environment. Trading your strategy on sim is very, very different from trading it on live, and even if you're just risking a small amount of capital with the micros, you'll learn a lot about live trading. Micros not only help you develop your strategy in a live environment, but they help you with the psychology and the emotionality out of the whole thing, right? Number 7, you're looking to consider scaling your account, right? If you start with 2 to 3 micros at a time, realistically what you want to do is end up scaling. Scale to 7, 8, 9, 10. Unless you're trading about 20 lots on the micros, there's no real reason to trade the minis, because you have much more malleability with the micros. You can manage trail move stops with 20 micros much easier than you could do with 2 minis. I understand that commissions and whatnot are an issue, right? We'll talk about that very soon, but they shouldn't be a worry as someone who's actually scaling, because if you're scaling size, that means you're profitable. You're not profitable if you're trying to scale size. That means you're oversizing and you're not doing it correct. And then finally, with all the data that you've collected from your micros trading, you can really understand after a month or two if the strategy is something concrete and something that you want to continue with, or you can kind of provide some tweaks here and there. So now that's broken down, I want to talk a little more about the intricacies about scaling with micros, right? The ups and downs, the pros and cons, before we start breaking down the strategy that a lot of people are super, super excited about, I hope. Naturally, there are pros and cons to the micros, right? One of the biggest cons, we'll start off with that, is that commission, right? Commission does add up. It's about like $1.50 per contract round turn. It eats up about like 40% of the profit on 1 point. Now, obviously, the larger you trade, the more contracts you're going to trade, the more commissions you're going to pay, right? So the bigger the moves you need to have. So a lot of people are like, why would I waste my time trading the micros versus the minis when one contract on the minis, maybe I get it for $4. One contract on the micro times 10, maybe I pay $10 in commission. I pay more than double. That's not the goal here. The goal is the pro of the micros, which is they're a very malleable contract, meaning that you can size differently, you can enter at different spots, you don't have to be super precise, you can have larger stops, you can have larger size. It's very malleable in that sense, which is one of the things that I'm going to break down this strategy. It's a huge, huge plus that you don't necessarily have with the minis, because the risk is much, much smaller on the micros, no matter how you split it and dice it. The last part that I'm going to be breaking down here is revealing that $1,000 trading strategy on the micros, but to do that, we're going to have to jump in front of the computer, so you're going to see my pretty face in the corner while we take a look at those screens. So I'll see you over there. All right, so this is a screen capture of one of the trades, so I'm going to be doing a voiceover realistically on this as we look at this. This is a micro trade, right? And as you can see on the screen here, I'm trying to get short into an area, and this is the thing about the malleability about micros. I don't normally do this, but I have an area where I think that the traders are going to hold out the short, and it's around that 95 region. You can see how all these orders are scattered, and I'm trying to protect my stops above. The whole concept about this, I want to look at this trade, and then I'll break down what it is that I looked for after this trade kind of gets complete, because there's aspects to this that I want to voice over first. So first and foremost, right, I'm using a depth of market or volume profile, and just like a regular chart here, we're up about like $400 on the micros as we come into this trade. And we've broken through some kind of key structural support, or an order flow support, if you will. So I'm looking to get short in a scattered region of these micros. The good thing about the malleability of the micros is I can have an area that's like 3-4 points wide, and I can actually get into these trades on the micros from that region, from that perspective. So when I look at this, right, I think that there's sell side that comes out around these like 93s, right? I know that there's sell side that comes out around the 93s. And the great thing about the micros is that you have the ability to use multiple contracts, right? I'm trying to fill 10 here or one mini. But the thing is, if I fill one mini, I'm either in or out. With the micros, I have the malleability to actually get out of trades at different areas. I can trail, right? I can extend positions, right? I can fill at kind of sporadic areas realistically. So if I'm starting off as a newer trader, I'm going to be trying to fill within like 2-3 points, right? 2 to 3 points on average, right? If I'm a little more advanced, right, I'm trying to fill in like a 4-point area because you don't have to be as exact. You don't have to be as precise with the micros because when you learn order flow, when you learn the areas, the volume profile, you understand there's maybe like a 2-3 point area that you can pinpoint that will hold based on the previous sellers or based on what had happened in that area. So if I'm looking to fill 10 contracts on this, right, a 10-point move is $500 right there on the full 10 size, right? I'm trying to target the mid 80s, the low 80s, and the high 70s and the low 70s on this trade, right? Trying to play this out, see how this works. So the whole premise of this is an order flow based strategy, right? And my risk is managed on the micros here and my entry is a little more sporadic, but it's an order flow strategy based on volume profiles, as you've probably seen throughout my entirety of this page, right? Based on this strategy, what has happened is we've got a sharp decline from the 4,400 region on the S&P on the futures, and the whole day was very bearish on the depth of market. If I look at the depth of market right now on this screen, I'm seeing like 300 orders and we just got to push lower. 300 on the market sell side and they push it lower. 400 tries to hold out the bid, right? What happens is that 300 sellers against 400 buyers and they push down. I have bearish reactivity on this depth of market. The one thing that kind of makes me think that, hey, we could probably hold the high 80s as support is that there's 1,000 lot net sellers on the delta, right? So 1,000 sellers into a low, what happens in that region, they can't break lower. That allows traders to actually get trapped and try to run buy stops. This instance is a bit different because what you see in the 89 quarter, you have 700 sellers below that go market. You have 89 quarter that has negative 1,000 delta. They're not popping up aggressively with big buys from those orders. That suggests that there's a little bit of sell pressure that's still holding on to this market, and there's general bearish movement overall. So why don't we watch how this trade plays out, right? We'll fast forward it a little, and we'll see how it kind of orchestrates itself in terms of the move. Because, like I said, when you get a break and a retest of a Q order flow level, because you can see all the rotations and them trying to hold out that low 90, right? Once that breaks, those buyers are done, right? Their stops are taken. The real shorts that have been trying to short this whole market are in. They're happy. So in and around that area, I want to pinpoint where they started selling before. They started selling at 97. So I could wait to see if 97 trades, or I can start filling where they've been trading the sell side into 97. So the best fills would probably be 95 to 97. You can see I'm trying to fill 92s here, 92s, 93s, 94s. I'm getting a bit eager, right? Sometimes I don't enter the best areas, but I want to pinpoint where the market sold before so I can sell in with those big sellers. I want to pinpoint where the sellers actually made the move so I can sell with them. That's the whole concept of this. So as I'm looking at this trade right now, right, this recording, we got filled on the majority of the size that we're looking for. All in all, they rejected really aggressively from that area. What I'm looking for is the depth of market movement to hold continuous offer as they have been throughout the day. And we're trying to fill lower, right? So what you can see is we have an open profit about $100, $130 on this trade off 8 micros, right? That in itself, it's only like a 4-point move right now. We already have 400 on the day on the micros. And you can see if we just close this position out, we're up like about $600 at this point. So you have it there. The thing with these micros is you have the malleability, obviously, like you saw, to enter the trade. What I want to do is I want to focus on the order flow as well as the levels in the areas that we've been trading. So if we just look at the DOM for the time being, you can see that into this low, into this 88, 89, you have the delta side, which is showing large negative deltas, and you're looking at the middle columns that have very large orders, right? The middle columns that highlight the blues and the reds. Realistically, they're showing big orders that are coming in on the reds, which are market sells. So all of these big orders you can see on the delta is on the other side of this where you start to see these large negative delta blocks on this. You're seeing that all these big sellers coming into these lows right now, they're not letting buyers step in, right? When a buyer steps in, you get a big buy in the middle columns that jolts price up. The fact that we're moving below these areas suggests that there's more sell side in this. So one of the key aspects is using this depth of market to actually find who's in control of the day, of the trade, of the move. So I can stay in this trade and I can look for more profit. You can see right now the position's up like 290 bucks, let's say on the micros. So is doing pretty well, right? We're getting some good profit out of this. So it's a very, very opportunistic trading asset. It's an opportunistic asset. It's an asset that allows you to learn to trade in a live environment and break down the market. So why don't we cut this recording out and then we'll see how the trade actually played out, right? And more importantly, break down the strategy that I've been promising you guys throughout the entirety of this video. So let's go ahead and check that out. All right, so let's break this down, right? You can see on the micros just shy of like 800 bucks. So I lied to you. It's not $1,000 a day, but we had some trades here earlier on in the day, right? Took a first stop and then tried it again, took some profit. And this was the trade that I was showing you guys trying to short. So the strategy behind the micros is what we've been showing you guys and propelling forward on this whole channel. It's based on volume profiles, it's based on order flow. So two simple concepts that you have to understand, right? Number one, the trade strategy. Number two, the risk management. Let's talk about the risk management first. First and foremost in this strategy, I have to understand how much risk I'm taking. So my average position, if I'm trading a micro, is going to be about like 10 to 15 contracts because they're smaller size. Otherwise, I'm just going to trade minis, trade like 3 to 6 lots. So if I have a position that I'm not like too confident in, right, maybe I'll trade micros, or maybe I don't want to put the risk on, I'll trade the micros. I don't necessarily believe in people that say, oh, if you can trade minis, just trade minis the whole time, right? Sometimes you feel like shit. Sometimes you're not in the right headspace, but you can trade, right? You wanna see if you can shoot a few bullets, see what kind of comes about, right? Sometimes you don't think the risk is there for a very large position. So I'll be trading the micros in that sense. And today we traded a decent bit of the micros, so it was a good day to show you guys. So number one, the risk management. I have to understand what my full risk is on on a position. So if I trade 10 lots, right, and I have a 4-point stop, let's say, that's $200 of risk for this position. But my gain, I'm looking for about 2x of that gain. So I have an area that I spread out about 3 points for my entry. So I can have an entry area about 3 points. So it allows me to be much more valuable with my entries than I do have to be with the minis, because the minis is much higher risk. So I'm looking at this area, right? And I'm looking for the risk to reward for it. I'm seeing who's on the strength side, right? Are the buyers or the sellers winning? So step number one of the strategy itself is understanding distribution theory and where volume sits, right? Order flow levels, distribution, so on and so forth. So distribution theory has a very simple concept that we've been breaking down in our whole YouTube channel, is that we find these big distribution block bellies, right? Stuff like this. So this is a general distribution, let's say. We have a very thick balance that starts from these low 90s all the way up into like the 44, 10, 8 area, right? So that's a general understanding of that large distribution on a 50-day profile. We also have individual sessions that give us information. So this is the overnight session. We have a lot of volume that builds up right here at this 93, 95 area, which ping-ponged on the overnight session. That means price is trapped in the overnight session. I'm looking for an exit, right, outside of that session, right? If I want to be directional, I want to catch a trend move, I'm looking for an exit. I can also play the range, but it depends on what the DOM tells me in terms of where the order flow sits. But generally speaking, if I want the high probability, I'm waiting for the expansion outside of that area, because the volume between here is very low, meaning that there's a very high chance that price can move through that area. So if I zero into this level and I understand it's a low of the distribution. It's around 92 to 94, right? It's a 2-point area, let's say. So when we exit outside of that, we trade into those high 80s. I've accepted that price is outside of that distribution block, and I can look for the sell pressure through that area, right? As long as we hold within, great, right? I'm looking for the long, and that happened earlier in the day. I'm looking for the short as long as we hold within. But should we get that break on real strength, I'm looking for the break in the retest of that distribution block to target new areas of volume to the downside or upside in that sense, right? So I have a little bit of downside pressure on the session because we sold off aggressively. A lot of volume came in on this session. So if I look at this, we get this little head fake break that I'm trying to buy because it's not super bearish just yet. But you can see right here, it goes super hard sell from this 44.05 and it dumps aggressively, right? So we sell through that area, and I'm looking at the DOM and I'm trying to figure out on the order flow perspective, right? If we sell through an area, if I have a distribution low, if I have a key support zone, I want to see how hard they sell through it, right? I want to look at this depth of market, and I'm focused on the middle columns here. These middle columns allow me to see big market sellers versus big market buyers, right? There's a video I want you guys to check out to understand this a bit better, right? It's on our YouTube. So I'll post it here. You can go and see that little tag. Now, if I'm looking at this and I say, okay, these 90s, I want to see massive sell side, right? So if there's huge sellers that dump this, right, I'm looking to sell with those sellers. There's also the concept of delta. Large delta is 1,000 plus on the minis, right, on the S&P. So if I look at this and I have 1,000 positive delta here, 1,000, I have an area from 94 to 97. If I'm below, that suggests that these buyers are actually trapped and they're going to sell prices into them, right? So that's a very simple concept as well. If I'm not very good at order flow, I want to see where the delta is and make sure that we're above or below that delta. So I'm going to be looking for a very simple escape outside of the compression, break and retest, right? That's a very, very clean strategy to find a trend move. And I'm going to combine that with the confirmation that there's order flow in this perspective so I can sell in with the large sellers. The large sellers, they look like maybe 300 plus on the DOM that go market sell and they push prices down so I can sell with those guys. If there's 300 buyers with the sellers on this side, and they push it down, even better, because that means that these buyers are in a lot of trouble. So the concepts are somewhat easy. They're only twofold. I'm not looking at any price action. I'm just looking at the volume profiles, the market profiles, as well as the depth of market. Obviously, I didn't go into super supreme detail about the strategy because there's so many videos that we have on our YouTube that you can go and check out. Also, a free futures course that explains all of this on our website. You just got to go and look at the banner at the top of the website, TRADEPROacademy.com. But if I'm looking at this strategy, right, twofold, understand my risk so I can enter, right, and have a stop, and understand how I'm going to trade it. So my risk, if my entries are scattered based on the sellers that come in, because I'm looking for sellers and stuck traders so I can sell into those areas. I can have a 2-point area where I can sprinkle my entries in so I don't have to be super precise, right? The whole strategy hinges on understanding where price is balanced versus where it's imbalanced. I can play the balance, which I did earlier on in the session trying to buy it, or I can play the imbalance with the exit through this low volume area, targeting that lower to mid 70, right? So if I'm shorting into the mid 90s, I'm expecting that 20-point move because prices move quickly through those low volume blocks, right? So that was a general premise of the strategy and how you can actually take this and use it to start trading micro futures and actually generate good profits in the market rather than using this as just a single little stepping stone to try to trade minis, right? The goal isn't to just get to minis as fast as possible. It's to learn these strategies, break them down, and trade them from an educational perspective to learn how these markets actually move and what they do. So if I'm looking at this, my main concept is distribution theory, how I'm going to find the main distributions. And I have to ask myself, are we inside or outside the distribution off the open of the day? If we're inside, I'm going to play the inside of the distribution. If we're outside, I'm going to play the outside of the distribution. If we break the outside, I know I have a very good probability move in a directional aspect to move into imbalance to look for another balance. So if we're outside of the balance to the downside, I'm looking for the sells on the retest, right? Very simple. If I'm outside to the top, buys on the retest. If I'm inside, play these areas. and I get the confirmation of who's in charge, inside or outside, based on the depth of market. So if you want to learn more about these concepts, they're all over our YouTube channel. Go and deep dive into those. But it's a very simple strategy, and you don't have to be super exact on your entries with the micros. That's the beauty of it. So if you guys enjoyed this video, we talked about what are micros, how to use them to your advantage, right? Some steps for beginners, and overall a strategy. So if you really like this video, hit that like button, hit that subscribe button. It'll help us, it'll support us, and drop a comment down below, right, what you think of the micros. Have you traded micros? Do you use them as stepping stones? What are some things that you struggle with micros? Let's see if we can help out. All in all, check out our free futures trading course. It's in the link, first link in the bio, and I'll see you guys in our next video. So I'm excited about that, as you guys should be as well. Thank you and take care, everyone.